This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
China's exports of refined oil products could start 2023 with a drop of 40% in January from December's figure, as Lunar New Year travel demand boosts domestic consumption of transport fuels, trading sources and analysts said. The fall in exports from China, which has the world's second largest refining capacity after the United States, is expected to underpin Asian refiners' margins for transport fuels. China ramped up fuel exports in the fourth quarter of 2022 after Beijing reversed its policy to focus on economic revival from reining in refinery emissions.
OPEC Plus is facing volatile prospects in oil markets both in supply and demand, UAE Energy Minister Suhail al-Mazrou told Shark TV on Saturday. He said this was due to European sanctions on Russian crude taking effect in addition to China lifting its zero-COVID policy. OPEC Plus production capacity was down 3.7 MLNBPD due to fewer investments in the oil sector, al-Mazrou said.
Moving on to the top news in the energy sector.
At least 4 Chinese-owned supertankers are shipping Russian Urals crude to China, according to trading sources and tracking data, as Moscow seeks vessels for exports after a G7 oil price cap restricted the use of Western cargo services and insurance. China, the world's top oil importer, has continued buying Russian oil despite Western sanctions, after Russian President Vladimir Putin and Chinese leader Xi Jinping launched what they called a no-limit partnership before the war in Ukraine. The sources said a fifth supertanker, or very large crude carrier, VLCC, was shipping crude to India, which like China has continued buying Russian oil sold at a discount as many Western buyers turn to other suppliers.
Iranian oil exports hit new highs in the last 2 months of 2022 and are making a strong start to 2023 despite U.S. sanctions, according to companies that track the flows, on higher shipments to China and Venezuela. Tehran's oil exports have been limited since former U.S. President Donald Trump in 2018 exited a 2015 nuclear accord and reimposed sanctions aimed at curbing oil exports and the associated revenue to Iran's government. Exports have risen during the term of his successor President Joe Biden, who had sought to revive the nuclear deal, and hit the highest since 2019 on some estimates. This comes despite headwinds such as a stall in those talks and competition from discounted Russian crude. Next, we have the top news in metal markets. Copper prices in London rose on mine supply worry in Peru amid low inventories of the metal, stimulus hope in top consumer China and a weaker dollar. 3-month copper on the London Metal Exchange advanced 0.2% to $9,200 a ton by 0301 GMT, while the most traded March copper contract on the Shanghai Futures Exchange dipped 0.2% to 68,710 yuan, $10,261.66 a ton. In Peru, the world's second biggest mined copper producer, vandals on Thursday attacked Glencore's Antapaque copper mine, one of the largest in the country, prompting the evacuation of 2,000 workers from the site.
Iron ore futures fell on Monday, as new reports over the weekend highlighting an increase in COVID-19 deaths in top steel producer China weighed on sentiment. The most traded May iron ore on China's Dalian Commodity Exchange fell 3.6% to 839.00 yuan a ton as of 0220 GMT. On the Singapore Exchange, the benchmark February iron ore was down 4.1% at $120.40 a ton. China said on Saturday nearly 60,000 people with COVID-19 had died in hospitals since it abandoned its zero-COVID policy last month, a huge increase from previously reported figures that follows global criticism of the country's coronavirus data.
We will now look at the top news in the agricultural
A move by top palm oil exporter Indonesia to restrict shipments and boost domestic biodiesel consumption is set to squeeze global vegetable oil supplies already undercut by lower output in Southeast Asia and Latin America. Edible oil buyers, including price-sensitive consumers in South Asia and Africa, will bear the brunt of the supply-side constraints that come just as demand is forecast to climb, with China easing COVID-19 controls and India boosting purchases. Indonesia's new restrictions are another challenge for food importing countries hurting from last year's red-hot inflation, which pushed prices of key staples wheat, corn and soybeans to all-time or multi-year highs. That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.